Hey, everybody. It is Friday Eve. I love this day. It is Friday Eve. Welcome, everybody. Steve, Kevin, Brad, all of you that always come on so early. Aladdin, how you guys doing? Um, Pretty darn resilient market after Fed announcement yesterday. I mean, we've talked about it, Teflon market here. And the one thing that is a bit concerning, we talked about this yesterday on Market Minds when we were talking about the Fed and dot plots and blah, 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 blah. Is it a hawkish or a dovish cut? Well, look what happened. We got a cut, okay? Short-term interest rates went down like we talked about, but that longer end of the curve actually up. Okay. So, Patrick, welcome. We are glad to have you. We are glad to have you. So we've got to watch for that 10-year yield, which right after the announcement yesterday dipped below 4% for a nanosecond, is now up at like 410. Okay. So we would all think rates got cut by the Fed. How could those longer end of the yield, 10, 20, 30, how could they go up? That's because people believe, the bond market believes that there is going to be more inflation. So we will have to watch that. Hey, Patrick, any relation to Jason? Everybody knows who Jason Bateman is, right? All right. So let's get, oh man, Arneet, that is, I just love seeing things like that. Thank you so much for saying that. Really, really appreciate that. All right, yeah, Ozark, and he's got just an incredible podcast with Will Arnett and Sean Hayes. It's called Smartless. If you guys have never listened to it, I'm not a big podcast listener myself. That is one I do listen to. They are great. They are great. So you definitely want to take a listen to that. Definitely take a listen to that. All right. So what do we have here today? If there's one thing I've gotten much better at, it's understanding different. All right. Love that too. All right, everybody. Let's get into it. Let's get at it. Now, this is something today we're covering because you guys asked for it. I think it was Bear yesterday, maybe the day before. My days are still running together after my weekend last weekend. Somebody asked, can we do some stuff on covered calls? So yes, we can. Yes, we can. Covered calls 101 here, everybody. All right. So why do people use covered calls? Right? Pretty simple, actually. Generate income, reduce the net cost of your stock position. It does give you a little downside protection, not as much as owning puts, but it does give you a little downside protection. Certainly enhances your returns, and the flexibility that it offers you is awesome. So, SnowX, guess what we're going to touch on today? And listen, SnowX and I did not talk about this before today, but guess what we're going to cover today? So, yes, we will. So, first thing we have to talk about is if you have a long stock position and you want to get a little protection, generate a little bit more income, whatever it might be. Okay, how do you choose your strike? Right? How do you know which call to sell against your position? Well, first and foremost, okay, you have to think to yourself, where would you be comfortable selling your particular stock if it got called away from you? Okay, whether it's Nvidia, which is now currently trading, 176.70, Do you want to sell the 180s, 190s, 200s? Where would you be comfortable with if the stock appreciated that high, someone taking the stock from you? Okay. So I look at two things. Obviously, I want to look at the charts and look to see where there might be some resistance in the stock. Because what would be the ideal scenario if we had a covered call position? Well, just like every other position we ever talk about, where do we want a stock to go? To the short strike. So if you have a long stock position, you've sold a call above it, and the stock keeps moving higher and rallying to that strike at expiration, boom, win, win, win. Okay. So I'm going to look for resistance areas. Maybe there's a gap fill somewhere. And then, of course, I am always going to look at and use the expected move. Okay. So this is what a covered call position P&L would look like as compared to stock only. Okay. Obviously, stock only, right? You live and die by where the stock goes, up or down. Excuse me. You can kind of think of it, if you want, from a delta standpoint, right? Stock is 100 delta. If it goes up $5, you made $5. If it goes down $10, you lost $10. Okay. But by using a covered call, what you can see is it mitigates the downside a little bit, and it mitigates it by the amount of premium that you have collected on whatever call option you've sold. Okay. On the upside, you still participate in upside of your stock position. But if we get up to that point of that resistance, of the strike of the call you sold, that's where you start to even out. So obviously, like I just said, if in a perfect situation, your stock position rallies, you make money, and then it just gets to the strike price and stops, boom, you now have this appreciation. You keep all of the premium that you collected by selling that particular call. And then who knows, maybe you roll it out. Maybe you sell another call that's up here. That's a real good, what are your options? That's a real good comment. Owning the stock does not come with a time clock or expiration. Okay, very good. Very good. So a question that absolutely can come into play is, great, if I want a little bit of that protection, okay, we could definitely do it. Amit, I'm glad you brought that up. We will definitely do it on coin. Hey, Leo. Wait. Leo. Is that Leo from my son Alex? Leo? Come on. Leo, are you the man? Say it's you, buddy. I don't know, I'm waiting for Leo's response here. I just got all excited. Not that I don't enjoy and appreciate every single one of you, but my oldest son Alex grew up with a Leo Christopoulos, and I'm wondering if that is him. Okay. Yes, there we go. I was your coach. Yes, Leo. Leo, I don't know if you know this, but Alex and his wife are expecting their first baby literally any day. Her due date is Tuesday. So welcome, Leo. So glad to see you here. That is awesome. All right. How do we know if we want to get some of that protection? Okay. How do we know if we want to sell a covered call or buy a downside put or a protective put? Aladdin, that's great. Okay. How do we know? So, what do you guys think? Okay. What would be the first thing that comes to mind when we're talking about buying or selling? Leo, that is awesome. That is awesome. I'm going to tell Alex that right now. In fact, everybody, you're going to see me take a screenshot here because I am going to send this to my son, who is friends with Leo. Yes, Jake, premium. That is correct. And how do we kind of measure the amount of premium? Right? When we're determining a strategy that we put on, okay, what's one of the first things we look at to determine what strategy we're going to put on? As Jake said, it's premium. And what causes the premium to fluctuate? Implied volatility. Okay. When implied volatility is expensive and you have a stock position that you want to, protect a little bit, generate some income, that's when I'd rather sell an expensive call. If volatility is really, really cheap, okay, sure, I might be spending money, so I'm not generating income in that regard. But, excuse me, but if volatility is cheap, if premium is cheap, that's probably the way I would go, is buying a protective put. Okay. You can also do both. And we've covered that before. We can certainly go into that again on another Market Minds. That's called putting on a collar. When you sell a call and buy a put against your stock position. And typically you can do that for a zero cost transaction to get that protection. Wow, this is I don't think I put this out here today, guys, but this is a little bit of a love fest today. I gotta be honest with you. I'm loving this. This is great. Thank you for the commentary. This is awesome. All right. So we're going to go into a situation here, and we will definitely do coin, but SnowX, this is what you were talking about. This is what you were talking about. Owning an in the money call and then selling some upside calls against it. I know I'm not a good representation of the monopoly guy here, but that is called the poor man's covered call. As Kevin just wrote on there, the PMCC. So let's go into an example first of a covered call in coin. And then let's go into the poor man's covered call. Okay, who was it again that asked to go through coin? And I'm going to go step by step here on what I would do. No, Gregory, covered call is not the last move to close a position. Not at all. What a covered call means is that you own stock, typically. Okay? And what you're doing is you're covering your stock position by selling a call, or vice versa. You're selling a call which is covered protection-wise by your long stock. That doesn't mean you're closing out a position. Bingo. SnowX, that is awesome. And you know what? When we are out there in Vegas, we will talk about this. And if you want to get up and in front of the crowd there, and you actually want to talk about it and present that, we can absolutely talk about that. See if you want to do that. Okay, who was it that asked about coin? I'm looking back here in the chat. Oh, Amit. There you go. Okay, Amit. So first thing you do, okay, is think of your time frame. Okay, is there an event coming up? Is there like an earnings event coming up where you want to protect a long stock position, or you just own the stock and you want to collect some premium along the way and there's no event. So in coin, the next earnings are not until the end of October, October 29th. So let's go that route right now. Okay. Let's say you want to just protect or gain a little income, okay, prior to earnings. You don't necessarily want to have this position on going into earnings, but you put it out there. Okay. So right now the stock is trading 347-ish. Okay. Now, certainly a lot also depends on what your cost basis was. Okay. You could own this stock from 100 or 150 and obviously maybe be a little bit more aggressive on your covered call. But let's say, stock's 347 right now. Okay. The expected move going out, and I'm using basically 1 month out, which is right before earnings. Okay. The expected move is close to $50. Okay. Does everybody see that? Kevin, that is why we do this. I don't have to do this. Charlie doesn't have to do it. Mike doesn't have to do it. Dan doesn't have to do it. We do it because we truly enjoy teaching and helping people. There's no question about it. Okay, so $50 expected move, which would put us right around 395 to 400. Okay, great. 395, 400. So next thing I'm going to do is I'm going to look at some charts. Okay, here is Coinbase. And what do I see here? Obviously, the first thing I see, the thing that definitely sticks out from last earnings is this gap right here. This gap is right at 378. Okay. And boy, that 395 to 400 area we were just talking about definitely had some troubles getting by there, right? It did. It obviously blasted through there and then came crashing down. So I would look at this and say, okay, if the stock rallied to 395, 400, whatever it might be, that's a healthy move. That is a healthy move on my stock position. Okay, so if we were to look at the 395 call, we could see that's about $11, or you could sell one call option. Remember, each call option would be the equivalent 100 deltas of 100 shares of stock. So let's say you were long just 100 shares of stock, you could collect $1,100. You could collect $1,100 with the probabilities in your favor that that particular option is going to go out worthless at expiration. Okay. Or you could roll it out again. You can obviously, just because you have that position on a covered call position, doesn't mean you can't close it out also. Let's say, the stock is rallying a little bit and maybe not a ton, and the decay, the theta is working for you here, and maybe the stock is up a little. Now that option that you sold at 11, maybe say it's trading 7 or 6 or 5, whatever it is, doesn't mean you cannot buy it back. Take the profit on the call. You've had more profit on your stock position, and then go from there. So that is one idea. Okay. Now, you can also get a little more aggressive. The expected move is still 395, 400, but let's say you want to collect a little bit more money. So maybe you would sell the 370. That's $17 or $1,700, which gives you a break even at expiration at 387. Okay. This is the way I would go about this. This is a strategy for those of you that listen to me and Adam Mesh. Again, I don't remember if it was last week or the week before, when he's talking about buying stock and constantly selling calls, selling calls, selling calls. That's what I would do. Again, obviously, the further you go out, if you didn't really care about earnings here and just say, hey, I want that protection. I don't care if it gets called away, but I want to collect more up front. So we could go out, let's say, an extra 3 months to January. Now, those same, January 400 calls, now you're collecting $3,100 a piece. Okay. Now, what you have to be careful with is don't oversell your call position, meaning remembering that every call would be the equivalent of 100 deltas or 100 shares of stock if it goes in the money. If you have, let's say, 150 shares of stock, you can't sell 1.5 options. Okay. So you have to be careful on your risk tolerance, your risk calculation when it comes to that. Okay. Now, before we get to the poor man's covered call, I had to do this today, guys. Word of the day, playoffs, because my Cubbies are in the playoffs. Word of the day is playoffs. Since we don't have anything to look forward to anymore with the Bears 2 games into the season, got to ride the wave. Got to ride the wave. In fact, sorry to turn my back on everybody. I know that's definitely not my good side. Okay. I don't know if you can all see that. I am a season ticket holder. Let's go, Cubs. Let's go. Kevin, we're going into that right now. Okay. Kevin wants to know what the poor man's covered call is. Poor man's covered call is actually buying an in the money call, and the deeper in the money you go, okay, the more expensive that option is going to be, but also the more that call option is going to act like stock. And the big benefit of doing that, buying a deep in the money call as opposed to buying the stock, is your capital outlay is way less. Okay, it is called a PMCC. Okay, now what people will typically do with that, okay, is it's September now. Poor man covered call position, people will typically go out of further in the future, whether it's 3 months, 6 months, 9 months, could be a year. Okay, let's go out to March and buy a deep in the money call. Okay, so in the case of Coinbase, I don't know, let's say we wanted to buy the $150 strike call. Okay, that's right, $150 strike call, $200 below where the stock is trading right now. That call option is going to cost you $20,200. Okay, everybody see that? Now, that is a lot different than buying 100 shares of stock for 34,700, basically, rounded off. Okay, does everybody understand that? Does everybody understand that difference here between the 20 grand to the 34,700? Okay. So this call, this very deep in the money call, is basically a substitute for stock. Now, if you look at it as the Greeks, okay, it's not a 100 delta call yet, but we're treating it like it's a 100 delta call. Okay. And then let's say you own this March option, and it could be again any expiration you want, November, December, March. You can go out January of 27 if you want. And then what you would do is same thing. Look at expected move. Look at um, resistance levels and keep selling calls against your long call position rather than your long stock position. Okay. It is literally far less of a capital commitment to do the poor man's covered call as opposed to owning a stock and selling calls that's out of the money. Exactly. All of the big boys. Well, I think the call that I just looked at was what, 75 or 80 Delta. I guess I'm part of the big boys. Yeah, last call on the wheel here, guys. Hang on one sec. Oh, the wheel is closed. Okay. Randy, I could definitely walk through it again. Okay, so in the case of Coinbase, with the stock trading 346, rather than buying 100 shares of stock right now, which would cost you, 34,600 bucks, you could buy a very, very, very deep in the money call. Let's say you bought that 150 strike call that expires in March. That's going to cost you $20,168. Okay. There is no rule, Kevin. Obviously, the further in the money you go, the more expensive that option will be, the higher that delta will be. But there really is no hard and fast rule. And then the goal of this, Randy, would be to sell out of the money options, your covered calls, maybe each month, each week, up until the expiration of your option, so that you are constantly reducing the cost of your ownership. Well, William, if you went at the 100 delta, it would be even deeper, right? To get a 100 delta call option in March here, you got to go all the way down to literally about the 100 or the 90 strike. So it would actually be even deeper. Okay, guys, before we get to the wheel, two things. Well, if the short calls go in the money, Gene, is that going to be a good or a bad thing? If the short calls go in the money, everybody, is that going to be a good or a bad thing? Only good. It's only bad if you never wanted to have your stock taken away from you in the first place. But if those calls go in the money, it means you have made a lot of money up to that point. You've made money on your long call because that long call you own that's so far deep in the money has much more reaction to a stock move than the call that you've sold. So that call is going to appreciate way more than the call that you sold. So you could either close the position out or roll it, but it is a good thing. William, as we discussed, typically I would use 75-ish or higher delta. All right, guys. We can continue this actually tomorrow if you guys would like, because I know there seems to be a lot of questions. I actually have a TV interview, and then I think most of you know that I teach a class at the University of Illinois Business School, which is supposed to start at 12:30. I let them know I'm going to be about 5 minutes late today, so I do have to hop on that. But what I want to tell everybody is tonight, if anybody is interested, tonight And Mike, if you can post the link for tonight, Charlie Moon is doing an AI, live AI webinar tutoring for tonight. I can post that link, Mike, if you don't have it. It is, I know I got it here somewhere. Hang on, man, oh man, where is my link? There it is. All right, there's the link for tonight. If anybody wants to sign up, listen to Charlie, that'd be great. And then, as you guys know, we are hosting our first ever Prosper trading event in Vegas. You know that we do these fly-ins to Chicago. We actually have one in a couple weeks. We are hosting an amazing, amazing event in Vegas, the beginning of December. It's at the Wynn. It is going to be jam-packed with trading, education. We have lots of guest stars coming in. All right. So we got that also, which we will, anybody that is interested in finding out more, just ping me, or there's a link up there. You can click on that and that'll get you on the wait list. And now it is time for today's wheel, which looks pretty darn packed. So let's give it a whirl here. And the winner today, Frank, Gene, Gregory, G. Slade, who it's coming down to a G. Slade. Yes, Charlie Moon is all of the coaches. All of us are going to be in Vegas. Myself, Charlie, Mike, Dan O'Brien, Howard, we're all going to be in Vegas. You bet. G. Slade, are you around? Are you around? Are you in the house? Oh my God, that was quick. You were waiting. You were waiting. All right. Love it. Love it. You know the drill. There it is. Shoot me an email, prosperswag@prospertrading.com. Now, before I sign off, do you guys want to continue this tomorrow and go through some more examples of covered calls or poor man's covered calls tomorrow? I am happy to do so. Please, yes. Bingo, you got it. You got it. Ask and you shall receive. All right, everybody. Thank you so much. As you can see, I am really pumped about my Cubbies. I'm really pumped about Vegas. We got Charlie Moon tonight. There is a lot of great things going on. So thank you, everybody, and we'll see you tomorrow.